Do you fear that 6.7% headline GDP for India is now at risk, given what we have learned from this global tariff shock?
Yes, I think so. What's happening here is that the impact of tariffs on India can both be direct and indirect. The direct is, in terms of the exports exposure India has to the US, and there the 26% tariffs can actually shave off 0.5 percentage points from GDP growth. So if you had a GDP growth estimate of 6.5% going into the whole tariff situation, it could come down to about 6%. And that's just the direct impact. There's also a pretty meaningful indirect impact that can happen if global export volumes, global FDI flows actually slow. And then if you see a lot of rerouting of exports, for example, say exports from China coming into India in a bigger way than before, and that hurting India's manufacturing. So that indirect impact could also aggravate the situation. So one way or the other, direct or indirect, our sense is that growth will need help going, in the next couple of quarters.
Pranjul, on this issue of the RBI possibly front-loading rate cuts, could they go by 50 this week?
Look, we're sticking to 25 basis points for the simple reason that if you go with 50, you signal panic. And I think that's one thing the RBI would not want to do. I think, if anything, they would want to show that everything is extremely calm. By the way, even the dollar rupee has been extremely calm. And I think they'll want to show everything is extremely calm. But having said that, my sense is that we are going to get back-to-back rate cuts. So in April, then in June, and then in August. So by end of August, rates could be about 75 basis points lower than where they are today. And my sense is that even after that, although I don't have them in my forecast, the risk, if anything, is for further cuts down the line, even beyond August.